Hello everybody, hope that you are good. Daily videos are back and this time is going to be consistent. I needed to take 3 or 4 weeks off, some time off. I explained on Twitter why, but the truth is that I felt a bit anxious and I struggled to accept a bit my current situation, and is that in the last 3 months I was able to buy 2 apartments. Then it's quite difficult because I see, where I come from, quite a humble place, and my family, my friends around me, so they're still in the same place, but I'm not. So sometimes it's quite difficult to accept the change, and I just needed to take a few weeks off to think about everything and come stronger. But anyway, Bitcoin, it seems like it's taking also a little break here, because if you notice, guys, it's dropped. How much is this? Almost 18%, 17% down, all right, from the, new highs, because it made new highs. It went all the way to 74k, pretty much. Now, if you follow me on X, on Twitter, which I guess most of you do, last week I posted 2 scenarios for Bitcoin when we were in this area here. And one of them was, the main scenario, the first scenario was to change the structure, because if you notice here, we have a low, a high, then we have a lower low, a lower high, a lower low, a lower high, and then, okay, at this point here, it was at a time to make a new lower low, and that would be basically to attack this level here, 59k, or instead to change the structure and make a higher low, okay? And that is basically what I was signaling here. I was mainly supporting this scenario, and in yesterday's Sunday update, we were also paying attention to this idea. Now, how can you trade this? Well, the first thing is that if you notice, let me remove this, the main resistance here really is the 4-hour 50 MA, is this purple line over here. You can see how it was also support back then, and if you scroll down, you can see how the uptrend comes from that level, all right? And now it was getting tested as resistance. You can see here, once, twice, 3 times. Now, in this 3rd time, it's quite interesting because you can see Bitcoin made an attempt to flip the resistance into support, but it missed, okay? Because you see this green candle breaking above the 4-hour 50 MA, but the next candle, this red candle, is going to test it. It fails, closes below it, then here it kind of gets messy and it drops, okay? Now, when you are looking for these flips of support resistance, sometimes you don't get them. In fact, I think that it's likely that we don't even get it here, okay? I'm going to tell you what I think, what I see more likely, but what I see most likely, guys, in my opinion, is that this goes up straight from here and that it doesn't come back to test support. Now, it might do it, it might happen, but I think that that's less likely. And I'm going to tell you why. Because that's what everybody's waiting for, okay? Why do I use the 4-hour 50 MA? Because that's what most traders use. The 50 and the 200. Now the 200 really is the same as the 50 because the 200 EMA in the 1 hour time frame is the same exact EMA as the 50 EMA in the 4 hour time frame. Right? That's what most people use. 50, 200, 100 EMA. The 50 summons all of them, okay? Just in different time frames. Now, if it comes to test this as support, which I don't think it will, but if it does, then that could give us another entry, okay? And you have to be very careful that it doesn't happen the same as it happened here, okay? You want to see at least 2 candles testing it as support, not only 1. You want to see 2, ideally 3, but you usually see 2, and then you can see uptrend, okay? So at least wait for 2 candles testing it as support. That could be your entry, because if you notice here, for example, it only happened once, okay? That green candle tested as support, and the next one breaks below it. You need at least 2 candles. I always say this in the course. That, by the way, you're gonna have a little surprise at the end of the video. But anyway, I still don't even think that's gonna happen. I think that it's most likely that this happens straight away. I don't know if it's gonna go straight to 72k, but at least it's gonna go to 69k. Okay? And that could be this part of the projection. Then maybe at 69k we get the little retrace that I'm talking about here. Okay, back to 67k, and maybe by then the 4-hour 50 MA can act as support, but I see a bit of continuation from here all the way to 69k, all right? That's what I'm more leaning towards. So how can we trade this? Well, in my case, yesterday I posted a Sunday update and we were seeing this candle closing, okay? So in the analysis you can see that I was pretty clear that price was gonna go up, so I waited for this candle here to close above the 4-hour 50 main, and then as soon as it closed I opened a long there. And now, to me, I'm not opening a new long here because I'm already in the position, so I'm not in a rush. I will only open a new long, and that will be basically to DCA and to add, compound to add into my position. If we get a support here, okay, and I want to see 2 candlesticks testing the 4-hour 50 MA support. If that happens, then I'll open a new long, right? Now, if I was not in this long already, I would open a long here with a small size, and then if it comes back to the 4-hour 50 MA and tested a support at least twice, then I would compound, I would DCA in and open a new long, all right? But that's the way. Now, what's the invalidation? To me, it's clear. Literally, what I'm trading is the 4-hour 50 MA, all right? I'm basically trading as resistance support flip. So if we lose the 4-hour 50 MA, if we close a 4-hour candle back below the 50 MA in the 4 hours time frames, then I'm out of the position. Okay, it's quite an easy trade because right now we're only, I think, 2% away, not even that, 1.5% away from the 4-hour 50 MA. So if I close a trade because the candle closes here, the risk is very low to me. Okay, only 1.5% in price value difference. All right, so to me the risk is very low. I'll tell you again, if I was not in a position, I would open a small long here with a small size, and then a bigger size if we get 2 tests of support of the 4-hour 50 MA, okay? And then you will have 2 entries, one here and another one here. And that could be signaling that the 4-hour 50 MA, that it was resistance, has now become one support, and price can continue going up. Because the whole narrative about price going up is that the liquidity is to the upside. And we're going to have a look at this right now. Let me take you to the order book. Let me take you to high block capital. And we're going to check that the liquidity is really to the upside. High block capital liquidation levels. Let me change the setting. Max liquidity, because that's what I'm used to. Let me check the delta. It's a $6 billion worth of long liquidations. Again, as I always say, take this amount with a pinch of salt because it's not real. It's with the max liquidity setting. Realistically, it'll be something like this, that it's like 220k, okay, $220,000. So but again, I'm gonna change it to max liquidity because that's what I'm used to. Still, to me, $6 billion in this setting is not much, okay? That's for your reference. It's not much, although it's pretty much the same as we had here, and then we saw a retrace. But usually this amount doesn't signal a reversal, okay? It could happen, but it wouldn't be linked to this. It's too small, so we cannot say, okay, because there are so many long liquidations, there is going to be a long squeeze. Now, that usually happens when in this setting we have $30 billion, $35 billion. Then yes, we can talk about a long squeeze or a short squeeze. But when there is $6 billion, if it reversals, it's not going to be because of that reason, okay? So nothing here is telling me to favor downside or upside, quite neutral, to be honest. Now, the only thing I'm noticing is that there is a bubble here of liquidations at 63,000, but it's quite isolated there, to be honest, so I'm not going to pay much attention to it. Now, if you go to the liquidation heat maps, and this is what I'm finding more interesting, and we also talked about this on the Sunday update yesterday, is this area here at 69k. Look at this, okay? What is the liquidity, guys? Look at this chart. What are the yellow bars? Pretty simple, right? 69,300. That's where all the liquidity is. Well, to be specific, between 68,500 and 70,500. But mainly that core of that cluster of liquidations, the main point is going to be at 69,300. So that's where I'm favoring price to go next. Okay, 69.3k. Of course, from there, maybe we start to see this area 70k, 70.5k, getting yellow, getting brighter, because, you know what I mean, when price goes up, there's always going to be some traders that are going to try to catch the top, they're going to open the position in the opposite side. That happens, so that could favor 70.5k to get, in this case, yellow, okay, a yellow bar of liquidity. But for now, 69.3k, that's where the liquidity is. Now, let's go and check the order book. Welcome to the order book, guys. Most of you know what this is by now because I show it in many of my videos. But for those that don't know, what you are seeing in the screen right now, this chart is it's a chart that keeps all the orders of the main exchanges, Binance, Bybit, all right? And the brighter that the bar goes at a different price level, it means that there is more liquidity in that level. So for example, right now, we are at 67,190, and you can see that right above the current price there is different bars showing up. It goes from red, orange now, also yellow. Look, it's gonna turn now. There is no bar. Okay, those are sell orders. Now, it's not only sell limit orders. It could also be take profits from a long position because that's also a sell order in the order book. Okay. Or a stop loss from a short position, that's also going to show in the order book. So it's not only sell limit orders. For example, at 68,000, we all can see that there is a red bar of liquidity, that it's quite serious, it's stuck there and it's not moving. That is not necessarily a sell wall. It's not necessarily many traders placing sell limit orders at that price level, and when price gets there, price is going to reverse. It's not necessarily that, because it could also be liquidations, it could be a stop loss from short positions, it could be take profits from long positions. We don't know what it is. The only thing that we know from looking at this chart is that there is a lot of liquidity at that level, and the chart moves, well, Bitcoin and any asset that is trading with a lot of liquidity is basically going to move towards those liquidity zones, all right? So by looking at this chart, where do we see the liquidity at? Well, we see it as 68,000, right? So that is telling us that the order book is favoring the liquidity going to the upside, and we can use this tool as a confluence for the direction of price, right? So we have the order book saying 68k upside. We have High Block Capital saying that liquidations are at 69k upside, and we also have the chart telling us that there is a potential resistance support flip with the 4-hour 50 MA. And with all of that, I come to the conclusion that I must favor higher prices. This is how I trade. First, I need to find the direction. Once I find the direction or the target, then I need to look for my entries. And I've explained them already, all right? So that's pretty much everything that I'm saying in this video. I don't want to make it too long. And before you close the video, I want to leave you with a little outro. So thank you so much for watching, guys, and I'll see you soon.